basically, so how are traders positioning and investors positioning, ahead of tomorrow's bond auction?
Okay, so the auction is going to be across 3 tenors, the 5, 7, and 10 years. For the 5 and 7, it's 35 billion a piece, and then 45 at the longer, the 20 years, and the 10 years, pardon me, and the total is 105 billion. So far in the market, it's been quiet. We expect a lot of interest there, and we expect the rates to come out at current market levels, which is trading at about 15.3 yield. Yeah.
So, compared to previous auctions, how do you see it panning out?
The previous auction came out at an average of 15.5 yield, but there's not been a lot of activity in the bond market because we've seen rates trend up in the short end of the curve. That's the fixed income space. The last home auction we had, yields came out at 14 for the 1 year, which is about 16% yield. So we've seen a lot of people try to rejig their portfolios. So what we've seen is a lot of interest at the short end of the curve, so they can take advantage of the expected rise in interest.
Interesting. I hear there was an FX auction announcement yesterday.
Yes, the central bank came in for the FX wholesale auction, where 100 million was on offer. And again, there was some intervention where they sold for the SMEs and the invisible. The results will be released today, and as a result of that, we saw liquidity leave the system. The market opened on Monday at about 105 billion in the money market naira. So as a result of that, we saw rates at the money markets inch up about 25% on the OBB and overnight.
But when you look at liquidity levels generally, how liquid would you say the market is right now?
The market today, opening today, is at 45 billion long. We've not seen a lot of pressure because there's no funding today. And we expect OMO maturity on Thursday, which is about 347 billion. That will help the liquidity in the market.
Beyond the OMO maturities, I understand that the FAC credit should be coming in soon. Do you see it posting this week or early next week?
We cannot tell. We're working with the federal government here, but we expect it towards the end of this week.
Okay. Let's look at the Eurobond. It's very interesting. We're seeing another Eurobond 2.7 billion thereabouts coming in the markets. What do you make of approaching this bond regarding the pricing you're expecting and the possible tenure and also the subscription rate?
Okay, for the pricing, I think there's going to be a little uptick because of the political uncertainties. I know that it's going to be, I hope it becomes subscribed at 2.9 billion borrowing. It's a lot of borrowing, but we see a lot of interest from offshore in Nigeria. So, yeah, the pricing we can't tell now because we have to also price in the political uncertainty risk. So, a little higher than the last auction.
In the news earlier, I talked about Ghana and the governor mentioning the fact that they could see some challenges because of the global tightening environment. How do you see this global environment impacting Eurobond activity, especially in the coming years, since we know that we always use Eurobonds to partly finance our budgets? Okay,
like I said, it's the Feds have said they're going to tighten over there's a consensus that says that there are going to be 2 more tightening before the end of the year. As a result of that, borrowing cost on their side is going to be more expensive. Pricing in the political risk again to the cost will make it more expensive than the last Eurobond price.
Okay, but when you look at our markets now for our own MPC, we have the final one of the year coming in shortly. We're seeing what's happening with inflation, and analysts have been expecting that it's going to continue to rise. How would you, see? How do you think the MPC will advise, the next meeting coming up?
For the last MPC meeting, some of them voted for a rate hike. And then we've seen that a lot of liquidity, FX liquidity, is leaving the system. We've not seen a lot of FPI interest as a result of the uncertainty. We expect the normal thing to do really is to hike the benchmark a little or use other supporting tools to increase interest rates. Okay, but let's look at the currency now, the Naira. Has been activity at the I&E window this week so far? There's the I&E window for the NAFEX rate is currently trading at 364 levels. And then we've seen a lot of demand coming from the FPIs, from the aggregate customers. And, the rate is driven by demand and supply. So as a result of that, we've seen rates go as high as 365.3 trades done, actually. And we hope that more liquidity will come into the market as a result of the seeing interest rates at the fixed income side, increasing interest rates at the fixed income side.
When you look at how the CBN has been intervening in the markets, basically, and you look at the fact that we've used quite a number of funds from our FX reserves to kind of keep the naira at a certain level, how do you rate this strategy?
The reserves is currently at 42.7 billion coming in this morning, and next month there's a lot of liquidity. There's a lot of maturity, almost maturity, about 2.3 trillion will come in. And if you convert that to dollars, that's about $7.6 billion rather. I think that the CBN would like at least to keep the investors that are here. So the other way they can entice them really is to try and secure them with better interest rates to keep them. Yeah.
On the treasury bill side, though, how are yields looking? How attractive are the yields looking? On
the short end of the curve coming in this week, yields were discount rates were at about 12.8. As a result of that, we saw bargain buys at that space, and then of course we saw the rates trend down to about 12.5 discounts. The mid and long tenors remain flat. We'll see reaction on Thursday when hopefully the CBN comes in and issues an OMO action.
So, but how do you see the market playing out this week, the rest of this week then?
If there's a no more action on Thursday, we expect that on the long end of the curve, there's going to be some activity, and there's going to be a lot of selling at the short end of course, so that they can reinvest at the long end of course and enjoy the high yield.
But in-house, where are you guys expecting inflation to print out? We're expecting the figures to come out early next month.
Agriculture hasn't really done well this year because of the flooding, so we expect another 2 to 3 or even 4 basis points increase from 11.28.
All right, then, so we'll keep our eyes on that.
Yes.
Thanks for your contribution.